let's start maybe with some quick introductions here. Let's start with you, Alberto, and then we'll just move along the line.
Alberto Iori. I came from Milan, Italy. I'm an independent broker, member of the SIOR network. And my business is, let's say, the northern area, greater northern Italy area, from Turin to Padova, from Swiss border to Bologna. That's my skills.
Perfect, thank you. Paul.
Morning, everyone. Paul Lewis, I'm Principal's European Director for Data Centers. Principal's interest in the sector, we've been investing in data centers in the US for about 14 years and are now looking to move that strategy over to Europe and invest in standing data centers across Europe.
Great, thank you. Peter.
Hi, welcome everyone. My name is Peter Pohlschröder. I'm the Managing Director of NDC Gabe, a service developer, fee developer for data centers, serving the cloud providers, data center operators and users on the one side, and the real estate owners, landowners, and investors on the other side. We try to bring those two universes together. We're currently building Google's first cloud in Hanau in the Frankfurt region. And in parallel complement to this, I'm the Vice Chairman of German Data Center Association, which actually is also addressing to everyone who wants to invest in data centers or wants to operate data centers in Germany.
Perfect, that's great. Maybe let's just start with you. And of course, if anybody's got any questions, one of the joys of it being live is that, of course, you can ask those questions. So feel free to do that. And also, if you're watching on the live stream, do also put in questions if you've got any. But let's maybe start with you, Paul. Just in terms of the overall market, I suppose, what were you seeing before we could all meet together? So kind of pre-COVID in a way. How would you see the market then and how are you seeing it now?
So the market from an occupational point of view, demand for co-location data center space was really strong pre-pandemic. The fundamentals of everything we do in our home work lives moving online was hugely driving demand into both the tier one markets, Frankfurt, London, Amsterdam, Paris, and the tier two markets across Europe. I think that's been given a massive kick by COVID. Suddenly we've all realised how important that connectivity is when we're trying to work from home or watch Netflix or all those sort of things. And likewise, that sort of kick in demand has been noticed by investors across Europe. So we're now seeing an increased demand from the investor community to find access to the data centre sector.
Maybe Peter, just picking up from you, I suppose, looking at Germany, but looking at the kind of key drivers, what have you been seeing in terms of the market? Are you seeing there being kind of greater activity? What's your sense of that?
Do I get you right? You would like to see the activities in the German data center market?
Yes, it would be interesting just to drill down a little bit into the German market and what you're seeing at the moment.
So I would say in Germany we've been experiencing over the last years that the big cloud providers who have been renting in the big colo and wholesale colo locations, that they are purchasing own sites, developing own capacities here. I think this is probably the biggest drivers in terms of data center development. And I would like to add something to what Paul said. So while we have been experiencing 30% annual growth of data processed, the COVID time, we experienced a kick of those data increase of 40%. So I think the growth story so far is not finished yet, and I think those are the main drivers for the future development in Germany.
Okay, good. And interesting, Alberto, just to get a sense from you of what's happening in the Italian market, and I suppose how's that developing if you compare it to other markets?
What's happening in Italy? First, the market is growing. We expect, as you know, we expect 200 billion from the European community for PNRR. And there is digitalization is one of the three main themes with green economy switch and equal sustainability for everyone. So the country has to digitalize, so public and private. And what kind of business is today in Italy? It's mostly around Milan, but it will be Milan and Rome. It's a EU developer. In a classic real estate game, you have end user, you have developer, you have investors. And as you know, industrial, let's say, I'm talking about industrial land, which is, I've been participating, for example, I brokerage MCI Workham in 2000, before the dot-com boom. And then we are 20 years later, now is the time, 20 years later. The game in Italy is, industrial area has to compete for different uses, okay? At this stage, data centers probably, if you underwrite a single business, is the most profitable, okay, for a landowner around the cities. Milan has a west side area of Milan, which is interesting for, let's say, for fiber network. And the game here, I see investors. Investors are specialists. Specialists was bought by big private equity, real estate, or the way to enter is both operations. Then it's on the developer side, maybe Scarpa is different. Here, I think in Italy, it's quite a land trader business. Skills developer know that you need fiber connections, they know that you need energy, which is the most important things in Milan today, and you have to master plan. In general, municipalities are happy with the data center. They prefer data center rather than logistics, because they think there's a high T, few traffics, low traffic, qualify workers, and we have to cover a gap. I see in Germany you have 600 points, we have 200. So it's becoming a huge market. Someone say probably there is a south of Italy that will connect with the northern Africa. That's an interesting discussion for the future, not for now. And that's the market.
Okay, interesting. And Paul, I wanted to pick up on something that was said before, which was just around the demand, and particularly during COVID. Of course, there's been virtual working, huge amount of logistics happening, all of those things, everybody shopping online, all meetings moving online, healthcare moving online, those kinds of things. And I saw a stat that said that the average person will interact with a smart device 4,800 times per day by 2025. So that's kind of triple where we are at the moment. So I suppose, that seems like exponential growth to me. So how do you see that when you look at all of that and including business and those kinds of things? How much potential growth do you think there's going to be?
Well, I think you're right. You are seeing at the data level exponential growth. And therefore, we're all becoming much more latency dependent. We all want these things to happen instantaneously on all of our devices, lots of machines talking to machines. So actually, whilst you're still seeing super strong demand for those tier one markets, actually what you're now starting to see is demand spread out across Europe and the need for data processing to be closer and closer to centres of population. So we've seen it hit the tier two markets, places like Milan, Madrid, Berlin, but that will just continue to diversify across more and more locations in Europe. In my opinion, we're starting to see the rise of edge and regional computing, and you will never go wrong investing in a tier one market, but equally some of the really interesting opportunities are to follow that trend towards the sort of the edge.
And I would like to add to this that you already indicated it, that the figures that you quoted are only for the private users, and but to what we think is that the bigger demand will be generated from the industry. You already said Industry 4.0, big data for artificial intelligence, autonomous driving, etc., etc. And in Germany we have a huge backlog in that. And there are different initiatives from the European, from the CISP, from the Cloud Infrastructure Service Providers Europe. They want to take the countries into responsibilities and ask for another 10,000 POPs in Europe, point of presence for the fiber connections, to be able to get to all places in Europe, not only the top tier markets like Frankfurt, Amsterdam, Paris, London, and Dublin. And so then there's one interesting figure which I just learned a few weeks ago. So Europe, as the second biggest economy in the world, they only are only processing 7% of the world's data, whereas the US tech companies they process 73%. So thinking about artificial intelligence and saying this is the future for our industry, we really urgently need to get hold of that data and start what CISPO already started, the Gaia X program, getting the ground ready to have a European cloud service provider, at least one or several.
And you mentioned, Alberto, just if I'm right, that there's therefore a European funding initiative which is going to be driving this in Italy. Did I get that right?
No, it's slightly different. I say there is a demand for operators, and the operators in most of the case are owned by big private equity giant. And in Italy, we have an experiment as per now, the developer figure. It's a land trader where we're interested to a discussion with you, the developer. How could developer, you master plan it, you make a power connections, you made infrastructure, but you do physical building. It's one of the most expensive products we have in the market. Are you developer and finance that kind of final assets?
Yes. So you're right, Alberto. So 75% roundabout of all transactions are M&A transactions in this digital infrastructure sector. And so we don't, like in the real estate, we do not experience many asset deals. And you are eager to get some, and but most products that you see in the market are rather the old-fashioned data centers. So what we as developer, NDC Gabe, we are actually offering our clients, if they come from the data center branch, the turnkey project, and we take care of everything from the first scratch to the turnkey handover, and we take care of the financing, funding, everything. We do that all on our own. That is very interesting. But taking what you just mentioned, and I think we have to understand this, we have actually two phases of data center development. On the one side, you've got the piece of land, and to develop this piece of land to be capable for a data center use, it needs zoning and power and carrier connectivity. This is, from the risk-reward perspective, about 50% of the profit in regards to the entire development of a turnkey asset. But in terms of equity and investment, you spend 10% on the land development and about 90% on the entire site. So it is actually, it doesn't, and this is why most of the co-locators in the past have been developing this for themselves, because it's that operational yields are even lower. So they say, okay, they have a blend of all yields, and then it makes sense for them to find the land, develop it, operate it, and offer all services required for a data center.
I mean, from my perspective, I think we're at a really interesting point in time in the European market. I think Peter's absolutely right. The traditional model is the co-locators very happy to buy their own freeholds, take it through, develop it, etc. I think what we're now seeing from the developer's point of view, lots of the industrial logistics developers are seeing a route to higher returns through accessing the data center market. So are starting to do that. There is an issue there. I'm not going to tell Peter how to develop data centers. He's the expert. But it's a longer time frame in terms of a project than it is for logistics to secure that permitting, to secure the power, to do the pre-let to the operator, but higher margins there. So we believe that we'll start to see more investment product come to the market from a real estate point of view, from several via developers doing that route and doing the sort of leasing route. From enterprises doing sale and leasebacks. We've seen a lot of that happen in the US market. We've seen it start to happen in the UK and starting further to happen across Europe. And then as that sort of market builds, equally we're starting to see some of the data center operators look to try and release some capital to feed their expansion through disposing of some of their existing data centers. So it's been a very niche market from a real estate point of view to now, but I think we're just on the cusp of that institutionalization and more product coming to the market.
And is that linked to the discussion there you mentioned there about that there's, you've now got hyperscale data centers, you've got edge data centers, so it's beginning to look, or it's beginning to feel slightly more comfortably like reverse logistics in a way, that people will begin to understand that better. Is that the sense of it, that the institutional investors are now understanding it better, or?
I think from our point of view, talking to investors, you've got some very educated investors coming out of Asia, coming out of the US. I think the European markets are catching up. I think to an extent, you've still got people just happy to invest in data centers and not really get the skin under the sector and understand the differences between edge, between hyperscale. But I think, as the sector becomes more and more institutionalized, that knowledge will come, and that's just to the good of the sector.
Yeah.
I'd even like to add that I think most investors that I see, most funds, they have it in the bucket list, but they only talk about stabilized assets. And that's a bit of difficulty because, as far as I know from KAGB compliant funds, they're not supposed to invest speculatively. And the development of the site in comparison to other asset classes is rather expensive. So to secure the power, you're always in a 2-digit million amount of money. And to spend it out of the fund, it's they don't dare it so far. They don't understand the market enough to do it. And so this is why we try to bridge and to provide assets.
Yeah, go ahead, Albert.
I think, back again, I think master plan in Italy is not the main problem. So you have to gain with the scarcity of industrial product. That's because if you look 10 years ago, industrial, who cares industrial? Today you have data centers, logistics, last mile, you have self-storage. From industrial zoning, you have many options today that would have been in the past. And that's an Italy perception. A master plan is not a problem. Municipality love it to have an high-tech buildings for someone to compete with the alternative use of last mile traffic and things. It's real energy. Energy is the key. I'm expected in Italy in a few months from January, let's say, perception will be activities of public interest. Italy retain money for digitalizations. That will be first priority. It will not a political problems.
That is definitely different in the top-tier markets. So in the Frankfurt region, if you come and want to build a data center, the municipality will most likely say, okay, what are you willing to pay that we give you the permission to do so? And they get pretty creative because, one thing is for sure, a data center doesn't need many employees, and it most likely won't pay taxes here, not even in Germany. And even the new tax novel doesn't look like they will really then pay the taxes in the municipality where they are located. So you have to get really creative in terms of how to support the municipality, not only with kindergartens, what we've seen in other asset classes when you build residential or playgrounds. You will have to, for example, in one case in the west of Frankfurt, a big player now is sponsoring the official pool, the public pool. So they have it branded like a football stadium, and they pay a hell lot of fees for it. And this is that was the only way how the municipality was able to receive capital from those operators. And in other cases, of course, you need a strong power connectivity, so it is very close to have probably provide infrastructure for e-mobility, etc.
I hope that one of the 8,000 mayors that lives in Italy doesn't look this interview.
But I think what you're seeing here is the difference between the emerging markets from a data center point of view and the established, mature markets. And certainly, I completely agree with Peter. I think as a sector, the data centers have got to start to think about how they interact with local authorities and municipalities to bring benefit to those locations. And they should do, because it's the industry of the future. But there's all sort of things. I think developers have got a role to play in terms of sort of more mixed-use schemes from a data center point of view, mixing maybe some, small, light industrial, high-intensity jobs together with data centers. I think there's some amazing opportunities there. And then, of course, the other big issue around data centers is around that ESG and sustainability. And as a sector, we've got to be able to show to municipalities what we're doing from an environmental point of view, whether that's connecting to district heat networks, renewable energy, all of those sort of things have got to become part of the offer to be able to secure those permits for data centers.
And I noticed
Totally
that you were displaying your sustainability credentials with your green socks, Peter. So,
So definitely at NDC GABA we have one of our major tasks is to decarbonize the digitization. So in the past it was rather hard to convince people to water cooling, etc. But now these days we feel very much in the pole position with our aim to build sustainably, operate sustainably, and in the end saving lots of money for the operators and the investors.
But equally, this is why we sort of believe that there's actually some really inherent value in some of those older existing data centers, because we all know from a sustainability point of view, it's much better to reuse and upgrade rather than to knock down and start again. So we think from a municipality's point of view, they'll be very keen to push that. And so, you know, equally, if you're investing in existing data centers, there's still a big ESG story around how you're going to work with the operator to improve the ESG credentials of that facility.
and I wanted to drill down a little bit into into that discussion around location, because obviously, does that mean if we're looking at more renewable sources that actually they're going to be closer to the coast? If you're going to be getting wind, you know, offshore wind, or you're getting wave power, or is that the way that it's likely to head in terms of the locations, let's say for the larger facilities?
Well, I think you've got that balance there. I come back to one of the points I made earlier around latency and the need to move compute power closer to centres of population. So actually, you know, whilst we have seen major hyperscale deployments in places like the Nordics, and they've got great sustainable credentials from that renewable power point of view, from a cooling point of view, actually the rollout you're seeing now is more around getting compute power close to those centres of population. But you've got to do that in a sustainable way. So it will be sourcing 100% renewable power. You know, I think as an industry, via the Climate Neutral Data Centre Pact, you know, we're committing to 100% renewables by 2030, and you'll see that roll across all of the European markets.
And is that going to be a practical? Yeah, go ahead, Alberto. Yeah.
I got a question. When you see renewable energy, at the end, you go to a power provider. Okay, you're no power provider. You have to have connections, whatever the length, or 1 kilometer, 2 kilometer, or just attach. And how you ask to your power provider to provide renewable energy, because he's provide energy, and then he's selected what kind of energy he will deliver to you.
Well, that's entirely correct. So the power you get out of the plug is so-called grey power, but of course through certificates you are able to what they call greenwashing. So you purchase green power capacities in the Nordics, and then you can in the amount of the power that you use in Germany, and through this you are able to match this net zero strategy for the moment. The aim is clearly to and we at NDC GABA, we are currently working on a project that is fed by on-premise solar. It's around about 600 megawatt solar, 400 megawatt data center. So we're talking about huge space. And you can only afford that in the northern part of Germany. You can't afford it in the south. And in the end, you manage to lower your power price to around about 10% all in. But there are several difficulties. One difficulty, for example, is that we don't have the ability in Germany, don't have the energy infrastructure to get the energy from the green energy from the north to the south of Germany. And on the other hand, well, land pricing, of course, is too expensive to have a solar plant next to Frankfurt. And there are, but for example, there are some power providers in the region. They have power from the river. So water power as well, not in the same capacity like in the Nordics, but they have. Then of course you have wind power. You need the wind power to have something complementary to the solar. But even I just had this discussion with Vattenfall, and so what they stated that even if we take all the capacities that would be available in Germany, we would always stay an importing country. That is very very important to understand. So whatever we do, the best approach to get more sustainable is not to use the energy through better and more efficient cooling systems like water cooling, and or different more differentiated capacities all over Germany. and more efficient software to drive the service within the data center.
And I'm just interested in that, if there's going to be more of a focus on solar and things like that, is that an opportunity then for Spain, Portugal, southern Italy, for example? I mean, is that going to be more of a location potentially, Paul? What's your sense of that? Because you're looking across Europe, of course.
So I still think those locations are being driven by demand rather than the supply of renewable energies. I'm completely with Peter. I think the future is around making these facilities more efficient, so you're just using less energy, full stop. But then we benefit in Europe from a deregulated energy market, which means that we can source 100% renewables. So it's a combination of, undoubtedly more on site where you can do it, undoubtedly getting creative around improving efficiency of buildings, and then renewables, and that sort of, the point of last resort is to have to offset. But it's a multifaceted approach. But in terms of demand for places like Madrid, that will be driven by the cloud players looking to open up their new availability zones, and the demand for data processing to be in that Iberian region.
Well, so let's look a little bit at that demand as well. So I suppose, who are the big players, and what are we seeing? I mean, are we beginning to see a move out towards there? So for example, if we look at the logistics side, Amazon Poland set up this year, which suggests that there's going to be more online usage. You're beginning to see more of that. So I'm guessing, where are they focusing their energies at the moment? The Google Clouds, the sort of occupiers, if you like.
How they source their energy?
No. Where are they in terms of locations? Where are they looking at? What are the trends that we're seeing from them?
Well, so far in Germany, I can say they are still focusing on Frankfurt. And what they say is they prepare, once Frankfurt has no more energy, to switch to Berlin, to add capacities in Berlin. But there are still some big cloud players like Amazon, Microsoft, who are not yet in the region. And we see from the press releases that Google, for example, they have purchased several sites around Frankfurt to have their availability zone there. They, in the press release, they stated that they will set up another availability zone next to Berlin. But they also said they don't know yet whether it'll be a leasing model or an self-owned and operated facility. And Poland, then, of course, next to Warsaw, we see a strong pickup there. Italy, Spain.
Okay, good. And it would be interesting just to touch a little bit on some of the challenges. I mean, you mentioned there about cities not necessarily wanting to have data centers. I guess understanding the requirement for data centers, but actually if they're not providing employment into the city. Is that a challenge, and how do we get around that? I mean, you mentioned the more mixed use approach, Paul, but do you think that's going to change in terms of cities realizing that they actually are going to need to have, it's a necessity, not a nice to have in a way?
I think the industry needs to get better at articulating the requirement for data centers. The fact that effectively they are becoming a utility alongside, water, gas, electricity. I suspect most of us in our homes, the first thing we'd moan about if it went off was the Wi-Fi. Certainly if you've got children, that would be true. So the industry's got to get better at articulating that. But also at engaging with municipalities. It's a fairly new phenomenon that we've seen this sort of resistance. They very much flew under the cloud in many locations in terms of gaining permits, etc. But we've now seen moratoriums in Amsterdam, Frankfurt are now looking at how they master plan data centres going forward. Dublin, we're talking about a moratorium. So these locations that have seen lots and lots of land, lots and lots of power go over to data centres are looking at how they balance those uses against other asset classes. And in truth, that's got to be the right thing to do. But as an industry, we need to articulate the demands that we're seeing from customers so that can be properly planned going forward.
And just thinking about the location side, I suppose, Peter, so if you're looking at ticking the boxes for something where you want to, you would be happy to invest in, so what does that for you? Is it has it got to be proximity to a large centre of population, power? What are the key things that has to tick a box for you?
We're internally, we're not that clear yet with my colleague Spiro. While he's still looking for sites around 10,000 square meters in Frankfurt, the Frankfurt region, I would rather go for 30,000 plus. And in general, we can say the bigger the better. If it is by far more than 30,000 towards 80,000 square meters of land, then of course you can think of a campus. Having a campus would decrease your risk in terms of vacancy risk, and so you can probably allocate several cloud players there, which I think is very favorable. So I would go rather with big pieces than with small pieces, but it's always hard to manage the hyperscalers not to take the entire site in the end, because it'll take ages for the ramp up. And then you have a huge site, and then they say, we need all of it, and it takes 10, 15 years to ramp up, so you didn't win anything. So it's better to go with a big site and try to manage to get 2 cloud providers on it. So of course, in terms of power, I would say it's around about 10 megawatts per 5,000 square meters of land. And of course, carrier connectivity in most parts of the big agglomerations, you can provide that. But it is always a critical aspect. You have to look at it. This is the first feasibility that we do is power and, of course, carrier connectivity.
And you mentioned, Paul, as well, kind of tier 2, tier 3 cities. Is that the kind of thing that you're looking at investing in now, or is that something where you expect that to be on the horizon as data usage increases?
No, I think it's definitely a phenomenon for now. So we're certainly seeing the developers, the cloud players, looking at those tier 2 and tier 3 cities. I mean, Madrid has seen tremendous demand over the last year or so. So those are definitely on the list for now. I don't think you'll ever go wrong investing in Frankfurt if you can. And I completely agree with Peter that actually the other trend we're seeing in the market is the move towards scale in terms of these campuses. But equally, I see a move towards a more regional and edge play being an interesting part of the market to invest in. For me, that's the sort of hyperscale market of a few years ago. And we're now seeing that sort of market to satisfy the hyperscale demand in those key tier 1 cities being very, very competitive. We're seeing land prices increase exponentially, if we shouldn't keep using that word, but we are. So, I brought a site in Slough when I was working for Segro at about £2 million an acre for data centre development a few years ago. You'll now be paying £10 million an acre, so a sort of 5-fold increase. So those sort of major cities are becoming very, very competitive. And actually, I think there's probably some better value in the sort of tier 2, tier 3 markets and investing in some of those slightly older existing facilities.
Yes, agree. So if you want to go with the hyperscalers, which are the big lots of investment lots, then you rather go for Frankfurt and then one day Berlin. But if you're able to offer co-location services, of course, you can immediately go for the corporates in Munich, in Hamburg, in Düsseldorf, Cologne, Rhein-Ruhr. So there are a few locations that also are growing, but in a much smaller size.
And if we just looking at that in terms of some of the challenges that you're seeing, I mean, that's interesting because the more that you begin to get different types of assets, the more interesting that becomes for the institutional markets. But what are the blocks on that at the moment? I mean, is there a lack of transparency? Is there much research? I suppose, what's holding it back at the moment?
I think certainly from an institutional perspective in investing in data center real estate, there is a massive lack of transparency. There's a lack of available data in terms of rent indices, benchmarks, etc. So that traditional investment process of looking at a market is very difficult to do within the data centers. And effectively, what you're seeing is people looking to invest off the very clear trend of us becoming a much more digital economy, of that move online, and therefore the natural consequence that there has to be a benefit for the infrastructure to provide that. But actually the sort of checkbox mentality of, great, how do I compare this to a rent index that's run for the last 10 years, you just won't find exists within the data center sector. And it's still a relatively small sector in terms of advisors and specialists. So again, it's difficult to get that sort of level of professional advice as you would do in logistics or offices.
And obviously you're part of an association here in Germany as well, Peter. So I guess what are the challenges that you're seeing and what are you trying to do in terms of solutions?
Yes. So I think the major task for us is to bring transparency in the market as German Data Center Association. We want to gain, to raise understanding for each other. We have in our board, we have the municipality, the politicians, as well as the operators, the developers, the services. And I think we're progressing very, very well. And I think the biggest hurdles are the lack of energy, of course, is the biggest one, especially in the Frankfurt region, lack of sufficient land to develop data center capacities where needed. And yes, I think these are the major obstacles that we face. And so as an association, as well as with our development company, so we are working hard to develop solutions and to develop more sustainability with data centers. From a technical perspective, as gathering all the different parties who have already been setting up businesses all around the sustainable data centers from all different angles, and to communicate also with the as a multiplier for the European Data Center Association, for CISPE, etc. And to drive digitization here in Germany, and of course to become then to reach our goals of net zero until 2030.
Good. And Eva, thanks very much for your question from the online audience there, which was around actually is one of the challenges, the big challenges for sustainability is data centers usage of electricity being so intensive. We've kind of picked that up, but is that a real challenge in terms of, I suppose, how cities and increasingly investors may look at that, because there's a lot of the investment pension capital that is not wanting to invest things that are, intensive use of power, for example. Is that an issue or not?
I think it is. I mean, from my point of view, it's really interesting that this issue has been the first one I've seen the industry come together and start to collaborate on, which is fantastic. They were very much insular, all the operators before, very competitive. So it was great to see more collaboration coming, and the various data centers associations across Europe working on this as an issue. I mean, when I look at it from a big picture perspective, actually digitization is the way that most industries are looking to move towards that sort of net zero future as a sort of global economy. So from that point of view, data centers are great because they're enabling lots of other people to save their carbon footprint. However, you can't get away from the fact that they are very energy intensive sites, and that comes back to all the things we've talked about before, having to make them as efficient as possible to enable that sort of move towards net zero. Okay, great. We've got around 8 minutes left, so if anybody's got any questions online or here, do let me know. Yeah, go ahead. In fact, can I just borrow that, Alberto, for a second? There you go.
Yeah, thank you very much. My name is Michael Beißen. I'm coming from the city of Dormagen, between Cologne and Düsseldorf. And we plan to develop an edge data center together with the chemistry industry that is very strong on our side, because they also see the need for a better latency. And we have exactly the problems that Peter Müller-Schröder was explaining, that why should we spend so much land on an infrastructure that does not pay taxes in our city or even in the country? We see the need for the infrastructure. Yeah? We want one, but we have to benefit somehow of that, because the infrastructure needs are extreme. We have very much experience with energy-intensive industry. and we think very well about if we want the new one in our site. And what we are right now discussing is if isn't there a construction that the city can be also stakeholder in this development, that we profit from the investment from the building, that maybe we rent the building to the operator. Is that a construction that you have maybe experience with or is discussed?
Well, some municipalities are actually, I don't want to say it despectively, but are dreaming of that. What we experience so far is that the users, they require a professional data center operator. Of course, you can try to find services for this. I mean, Dormagen has several good reasons to do this. I mean, you're coming from it's between Düsseldorf and Cologne. It's I think you've been writing me. It is coming from the entire region, from chemical plants and brown coal mining. So to have a indicator of where the region is heading to, I think building a hyperscale site is a good idea. You have especially all the energy infrastructure all around you from the big RWE sites. And last but not least, you should not underestimate the effect, even if the cloud provider doesn't pay you taxes. If it's a co-location provider, that might be different. And last but not least, it will always attract other businesses. And this is actually what all the mayors in the Rhine-Main region, they are eager to win, to attract other businesses in the digital, from the digital industry and services. And I think this would, coming from an industrial area now towards a service-based population, then very interesting for your region. And let's discuss this after this.
From my perspective, prior to me joining Principal, I worked at Segro, owners of the Slough Trading Estate in the UK, which has become a hub of 30 data centres, probably the most important cluster in Europe. And that sort of built up around having the permitting available for data centres. That was in cooperation with the local authority there, having the power on site available to the sites, and obviously that ecosystem of fibre. So I think there is a role for municipalities to play in that sort of master planning and making sites enabled in terms of fibre and power. And at that point, you can look towards some development expertise to go from there. But certainly there's a sort of landowner and an enabling role that I think could be very important to, making your city take a step forward down that sort of digital route.
Great. We've got around 3 minutes left, so that's going to let me very efficiently ask you to, so you've got a minute each, in fact, probably now only 50 seconds each, just to say, what do you see as the biggest influential trend at the moment for data centers, and also where do you see the best opportunity for investment? You can pick up whichever you want. What's your view, Alberto?
My view is data center was growing with the general trend of the economy, which is less physical than ever. So it's a data collection, artificial intelligence, logistics, and last mile. It's all connected. If you think about it, it's the way to manage data. I think, in my view, countries like Italy, we're probably expected to build, construct, and then probably we have to dispose single asset. We are very far from the way. And from investment side, it would be a corner for developer who gaming around the various skills that this market need to be effective and realistic.
Perfect. Paul?
So from my point of view, probably two major trends that are influencing. One is the ESG thing that we've talked about, and the second is the need to move compute closer to centres of population for latency reasons. And therefore, the opportunities I see, whilst you'll never go wrong investing in development in the tier 1 type centres, I think that's becoming more competitive. So actually, that sort of look towards regional edge plays and investing in existing facilities is where I see the best returns at the moment.
Great, thank you. Peter?
Actually, it's hard to add anything to this. I totally agree. And I think to learn more about the differentiation of different data center qualities, to go into the outback of Germany, if you want, to discuss about how can edge look like. Will an edge data center will have probably about 1 megawatt in a container with some power storage on it, with a windmill next door or some solar capacities, and the fiber to it. So I think we are still in discussions. The definition of edge has not been yet fixed, but I think these capacities are the biggest chance for investors for the future.
Okay, great. Thank you very much. So, really interesting session. There will be 10 minutes networking break now, which gives you a chance to ask any question you didn't want to ask in public. You can now. So to meet Peter, Paul and Alberto, do that. Thanks very much for your questions online. Thank you for joining us. Thank you for your questions here. The live stream will restart again in 10 minutes and we'll be looking at European residential. So if people are interested in European residential, do stay for that. And then we've got a series of different ones, including sustainability and logistics, interestingly, and I'll put some of the points that we raised here also into that because I think there's some relevance to that. But in the meantime, just because I haven't heard it for an awful long time, I would be delighted if we could all applaud our speakers. That would be great. Thank you, everybody.